Hi, and welcome. This is the first Zoom review. You just completed round one, and what we're going to do is we're going to review the results of round one for the team competition. But first, before I do that, I'm going to show you how you can complete round two. This is my practice game, so this is basically how you should approach finishing round two. Now, the first thing you should do is look at your overview results, and you want to see here that you have last year's year zero, which is not the year that this is the baseline year everyone starts with, and year one is the first year that you actually completed in your results. So if you increase here, the year over year is 87% increase in revenue. I earned 87 points. My quick ratio went down, and that was not good. So I had a 10% decrease in the quick ratio, and I lost 10 points. My debt ratio improved. Our profit margins went from 40 to 51%. And when you have better gross profit margins, that usually means you're going to have better operational and net profit margins. I earned all points in all three categories, with my net increasing 50%. And this is going to in turn help a lot of your other financial ratios: return on assets, earnings per share, return on equity, return on investment. These are all going to go up. Now, my total asset turnover and my return on assets wasn't bad, but my total asset turnover was negative. And that's because I increased my assets faster than I increased my sales, which is something that happens that for growing companies. When you're buying a lot of assets in the beginning, you can have a struggle to have a good total asset turnover, but that's okay because I'm building a company and I'm willing to sacrifice my total asset turnover to get my assets in place to move the company forward in the future. My market capitalization increased by 300%, which is, I only can get a max of 100 points for that though. My book value increased by 76%. My forecasts were more accurate, so I had better increases on the forecast, and it's going to be even harder next round to beat these. Now I had my operational investments doubled. They more than doubled, but I only get points for doubling. And then I had this surprise deficit. So I lost 100 points. So I only had 752. It would have been 952 if I didn't have this minus 100 points for a deficit. So if you have this surprise deficit, you say, wait, I finished a round and I had a surplus. No, your pro forma financial statements showed a surplus, and that's just an estimate based on your forecasts. So if you have a surprise deficit and you go to production, you will see that you have um, unsold vehicles. So if you have current inventory, these means these are cars that were not sold. I didn't sell them, I didn't earn a profit on them, and therefore I didn't get the surplus I thought I was going to have in my pro forma because I over forecasted. And that was the result, was having a surprise deficit. So the pro forma financial statement, this is not a fact. This is an estimate based on your forecasting. So if your forecasting is wrong, the numbers you see here will not appear the next year. So it's just an estimate. This is actual. Last year's actual. This year is going to be an estimate as I'm building my, putting my inputs together. So if I don't sell everything I promised to sell, that year over year is not going to be accurate. Okay. Now go to the assessment. So the assessment is an area where you want to go and see, okay, you get multiple rankings here. So you get a score, a percentile rank against I think it's the last 5,000 teams playing the simulation, and you have a descriptive. You also get information on how to improve your score, and 1 through 5 stars. So you can see here my total asset turnover and return on assets. I didn't do, I did average here, I did poor here, and it'll give me some information on how to do better. So this is the area you go to see how you did getting information against your peers and for your company and learning how to do better. Then you have the charts, and you want to look at let's see, your performance chart. And this is going to show just you how you did year over year. And this grows every year as you move forward. And it's very important to look at this chart here. So I sold all the cars, I met all the demand for these three. So this sales and market potential. So I met all my market potential on these three vehicles, but for luxury, I only forecasted 1900. I could have sold 2069. So that's important that I under forecasted. So you can review all your charts, and then the industry to see how your competitors did compared to you. And so if you're wondering, you look to who did the best in the round as far as points, and you can kind of see how they built their cars, their financial statements, their market potential, which is their demand. And this can help you build a better strategy by looking at other companies. So this strategic management review is done by the big auto companies. So they'll go and look at the annual reports of Toyota, Ford, Honda, and they'll see how did they build their cars? What were the specifications in their cars? This is all public information. These are all public companies, so they can get how the car is built. What's the labor costs? What's the overall sales and gross margins? And what's the overall company's financial results? So this is all public information that other car companies can look at to see how am I comparing to my peers? What strategies should I employ to change the dynamics of my company to be the best in the industry? So there's where the strategic management comes in, is really, looking at your benchmarks, looking to see your overview, how you did year over year, where you need to improve, then checking out your assessment, and then in the real world, looking at your competitors in the industry and seeing what did they do that I didn't do? What strategies did they use that worked very well that maybe I can incorporate? So if you're not number one, you might be looking at your peers to get better ideas. Your financials are fully backed up. Now, you've had many courses that went over financial statements. You probably had accounting or finance, sometimes marketing, introduction to business. There is 4 or 5 classes that go over financial statements and financial ratios. So you can review these and get a better understanding of how you did. And then again, you're popped back into next year. So as just like in the real world, all car manufacturers make a new edition of their vehicles. So now we're going to make, so this 2022, we're going to start working on our 2023 models. So we have what the car was like last year, and we're going to build it now this year. So I do have these operational cost reductions that I invested in. So I'm going to have a $900 discount. So when I make my vehicle, you see here that it would have cost me $37.50, but it's only $28.50 because I have this deduction. And that's why you invest in operational investments to get your company to be more efficient. So all these car companies, you get a much better car today than you had 30 years ago or 40 years ago or 10 years ago, because companies are continuing to invest research and development in technology, in software, robotics, materials to give you more of a car at only a slightly elevated price. Okay, so I'm going to build my car. I'd like to make my car better than last year. So I'm going to put in my variables, and I see the customer expectations have increased. The factors always remain the same, but what the customers expect is going to increase, and the sales price is going to increase. Okay. So again, I'm trying to build a better car here. And I'm going to increase my price to reflect that my car is a little bit better, and I can see I move my profit margin up a little bit. I want to make sure that I'm always moving my profit margin up. And my sales forecast. How do you do the sales forecast? Well, you have to look at the user manual. The user manual is going to help you greatly with the sales forecasting. If you haven't read over the user manual, then you're not prepared well for this simulation. So you look over the user manual. It explains all about forecasting, how to forecast the growth rates of the vehicle. This is a company. The growth rates are very high. So this is a growth company. And I see when forecasting for year one, here are my baselines. This is the average sales expected. You can forecast high. Your sales will be a lot different than what's listed here, depending on how you build your car, what price you use, the competition, things of that nature. So that's how you would prepare. So I'm using that information and I'm bringing my car in line here. So I have to do this for all the cars, and I could see that it is becoming, even with my cost reductions, I'm having a hard time meeting some of the ranges. And it'll give me an error if I make something that is under the limit. So there's a limit, really, a lower limit, higher limit of what you can do on the vehicle that's possible right now with the technology in place. Okay, so here I was able to, this is what I'm going for. I'm always trying to go up 5 gross margin percentage points if I can. I can't always do that, but I'm going to try. So my goal really is I want to give the customers better cars. So I want to try to make better cars, and that means increasing the expectations in each of these areas, but also, you know, not disappointing others. So here again, 45 to 49, I'm happy with that. I'm going to increase my forecast. And so I'm building a better car. So customers, are getting something that's better. Okay, so this has to go up. And in some cases, um, and you can go above or below the minimums to a certain point. So here I'm a little bit below some of the minimums here because I want to make sure that I can get increased profit margin. So let me do, okay. Okay, so there you go. I did the sales page. And remember that these do time out after about 45 minutes. So you want to make sure that you complete this pretty quickly. Because if you leave the page open, you go get lunch and you come back, the page is going to time out and you're going to lose your data. So when you start a page, you want to finish it within 45 minutes of completing it. Now, this age and target, this does not affect any of your sales. This is really for when I had the reflective observations, you could put this in to give a better idea of who you're selling to, for demographics, for advertising slogans, but we're not using the reflective observations in the summer, so we're just doing the mechanical part of this. Now, again, the expectation range of what's going to be spent on the peers, this grows dynamically with the amount of competitors and the size of the market. So this is the amount. Last year, I only spent 950,000. This year, I'm going to have to spend more. And again, you got to use the student user guide to see what's most effective for each of the vehicles. And it seems like internet and television are pretty effective, but there are some sales to pick up in each category. So again, I've got to, when I'm factoring out I'm going to put the most of my money in internet and then in television because I want to be a leader in those categories. And then, I don't want to lose potential sales in the other areas. There's not as many sales, so I'm not going to spend as much because I'm not going to be picking up as much sales. So so here I'm actually I'm a little low on advertising, so maybe I can push this up a little bit, just get in there a little bit more. And this is basically how advertising goes. And I'm between the range, right in the middle. You don't have to follow me exactly. You can be above. If I want to be marketing aggressive, I can go higher. So if I forecast a little bit aggressive, I might want to do some aggressive marketing. Or if my car doesn't have great characteristics, it's a little under the industry, I might want to do that as well. Okay, I'm going to pause the video here. Okay, now I'm in production here, and I see I only have a capacity of 2,000 and I need an extra 5,000. So I'm going to have to build a production facility to get myself up to 3,000 so I can make my 2,500 cars. Oops. All right. And I'm going to increase my operational investments for each of these cars. So now here again, I have to buy a new production plant. Actually, I don't, because let me just put 0 here. I have 500 current inventory I can repurpose. So I don't, this is one of the benefits of having residual inventory. I could reuse it. So I don't have to buy a new production plant. So it saves me $10 million and I can invest that in some operational investments. Just going to keep it simple here. And then this is pretty cool. I'm just going to build 2,000 because I don't want to buy a production plant here either. I want to be cheap and save that money so I can invest it in some operational investments. Increase that. And again, looks like I don't have to. So this is actually saving me some money since I don't have to buy new production plants yet. Next round, I definitely will. So I'm going to increase these operational investments and complete the production. And then let's see what my financials look like with my current forecasts and my current build. Okay, it's just taking a second for it to load. Here we go. So I'm going to go to the bottom on and I have a $41 million surplus. So I can do a couple things with that surplus. I could buy back some stock. I could retire some debt. But I'm going to go back to production, and I'm going to choose to invest some of that money in some additional operational investments because I want to get the maximum cost reduction next round. So I'm going to invest another 10 million there. So let's see what that turns into. Okay. So now I have a $24 million surplus. I'm going to actually retire some. Let me retire some stock. Okay, so this is $12 million of, let me make that 10. Okay, I'm going to do $10 million of stock I'm going to retire. And I have a surplus now of 14 million, which I hope is enough to give me a surplus even if I have some excess demand. So that's how I would complete round two. Let's see what my results would be for round two. So I can complete round two. And this is the practice. This isn't our live team competition game, so I can get instant results. And that's what's great about using these practice rounds to practice some of your ideas and some of your strategies. And did my strategy pay off? Yes, I had a surplus. Okay, so let's go. When you complete round two, round one is the easiest round to earn a lot of points. Round two and forward, it gets a little bit more difficult, but you want to average about 425 points or so you can get to that 2,500 points you need to get an A in this project. So I'm on target so far. I had 700 last round, 600 this round, so I'm doing very well in trying to get to my 2,500 after two rounds. So let's look at how did my year over year do this round. I increased my revenues. I was able to increase my profits only 4%. I usually shoot to go up by 5 each round, but 4 is what I can get now. That's fine, and that pushed up my operations and nets. My total asset turnover was a little bit better, and this is because I didn't have to buy all those extra factories. I just happened to be able to use my leftover inventory, and that made my assets a little bit more efficient. And my return equity was a little bit lower because I bought back stock, and then that increase my equity. So whenever you increase your equity by buying back stock, that's going to sometimes push this number down. My earnings per share, return on assets was good because I got my sales grew faster than my assets. Now remember, you can't be number one in every category, every financial ratio, every round. Sometimes you have to give back in a few financial ratios for others to succeed. My forecasts were more accurate. Overall, my forecasts were more accurate, except for that was just a little bit there. So I got my operational investments went up and my surplus, so almost 600 points, which is good for round two. And then again, you start all over with your assessment, your industry, your charts, your industry, your financials, and you go back to sales. And now you can see my operational cost reductions went up from 900 to 3,000. So I'll make it even that much easier to beat my profit margins this round. So again, when I'm going into the next round, and this is a long video, but this is because I want to give you as much help as possible. Um, so I can probably make a better car. And reliability needs to be higher. And I see that, consumers are expecting more, so I have to, pump up a lot of my characteristics. And yes, I was able to go up, look, 11 percentage points on my gross profit, and that's because of these operational cost reductions. Okay, enough of that. Let's look to see how did the class do last round. So now last round, here are the net profits. So we could see here, let me just make this a little smaller, and we can see that RA Autos did 52 million. It's terrific. And this is almost Exotic Wheels did almost 50 million in net profits. Awesome. Everybody did great net profits except for this company here was a little bit low compared to the industry average. They still made profits, which is good, but you want to look at what your competitors are doing and try to meet what your competitors are doing. Points per team, every team made points, and one team made over 1,000 points. Two teams made over 900 make that 3 teams made over 900 points. It's fantastic. The first round is the easiest round to make a lot of points because you're coming off of a bad management in year 0. So it's easy to make a lot of points in round 1. However, if you didn't do so well in round 1, you didn't get the points that you really hoped for, that's okay because your year over year means that you can have a strong comeback in year 2. Okay, stock price, number one in stock price is RA Autos, and the lowest stock price is MPL Autos, but everybody improved from the baseline of $5 per share, $5 stock price. So, what makes this company so much better, $16 versus $9, is probably because they had better profit margins, most likely better profit margins and better sales and better financial management. Maybe they bought back some stock that will help your stock price. It'll help your earnings per share, your sales. So we had number one in sales. Doesn't mean number one in profits or points, but you sold a lot. Just make sure you translate those sales into profits. Anybody can sell a lot. If I wanted to be the number one auto company in the world, I would just make a truck similar to the Ford F-150 and sell that for $10,000. I will have everybody in the planet buying this truck. I will probably lose $20,000 per vehicle, but I'll have number one in sales and also number one in losses. So you don't want to do that. You want to make sure that your sales are strong, that you're following the user guide and you're keep increasing your sales, because think of this as like maybe the beginnings of the electrical vehicle market where growth in these vehicles are double digits. So you want to get in there and take advantage of that growth by advertising, making more vehicles, understanding the market. And you only do that by studying the results of the simulation, reading the student user guide, playing the practice games. So RA Autos, which was number one in points, is also number one in earnings per share. So earnings per share is going to push the stock price up and is going to greatly influence a lot of financial ratios, which is going to help your score. So you want to be able to say you're increasing your earnings per share as much as possible. Okay, so that is the let's just look at the leaderboard. So we also get this leaderboard for our class. And okay, so exotic wheels, current round points. Let's see. Oh, RA Motors was not number one in points. I'm sorry. It was exotic wheels. So that is my mistake. So yes, exotic wheels. And let's just go back to, so exotic wheels and okay, so they are number 2 in stock price, and then they are number 2 in earnings per share. Okay, so I think what RA Autos did was they must have bought back some stock to get up there so quickly, which is a smart investment. Okay, so these teams, everybody did great in points. As long as you're above 400 points each round, you're doing good. So we only had one company below 300 points. So what did this company do to get below 300 points? Let's look at the profit margins. Yes, they're the only company to have lower profit margins than previous rounds. The previous round 0 profit margins are at 40%. So all except for 2 companies, everybody else was able to increase their profit margins. That's the strategic management of the world. If you're a public company, your strategy has to involve improving your profit margins. This is what investors expect. Look at today's news. When Snap or Target or any of these companies are releasing their earnings and their revenues or their profit margins are disappointing, their stock market's getting trashed. Target went down 25% because of bad profit margins, bad forecasts on revenues. So profit margins and revenues count towards your stock price going up, and all companies are looked at. You must improve your revenues and your profits every year. If you don't, your stock gets trashed. So that's ripped from the headlines of today, and it's certainly reflected in the simulation here that your stock price, your earnings per share, your revenues, these need to be increasing. If they're not increasing, you're probably going to be going down in points and you're probably going to be losing the simulation, just like you'd be losing the real world if you had a public company and your company was not able to increase revenues or earnings per share, more importantly, and profit margins. So these are looked at very closely. Just go to any headline news in the stock market these days, see how a company reports their earnings and profits. If they disappoint, stock price gets trashed. So it's the same thing in this simulation. That's why I like this simulation. It's very real world strategy. So we have our stock price. You want to know how RA Autos has the highest stock price, even though they're not number one in revenues or profits? Look at their you can look at their financial results in the industry area. What did they do? I bet they bought back stock and they lowered their outstanding shares, which is smart. And a lot of companies do that to keep their earnings per share up. Return on equity. This is how the ownership part of the company did compared to their profits, and then total points. Right now we only have one round. As we do round two, your points are cumulative. They'll start to add, and you'll get closer and closer to that 2,500 points you need to get an A in this project. So operating profit margins are greatly affected by marketing. If you over market or spend too much on marketing, that could greatly reduce your operating profit margins. And finally, your earnings per share is your earnings divided by your outstanding shares. So one way to easily increase this is to buy back stock. So, and your return on assets. If your assets are generating profits, you're going to see a higher return on assets. But if you aggressively buy assets and don't utilize them, like buying extra factories and not forecasting vehicles to be made in those factories, you're going to have a lower utilization of your assets. And again, net profits. Okay, so we get the point as we're looking through this leaderboard where you stand. So remember, you're going to go into round two and you're going to try and beat your score from round one as you're building your results for round two, and you want to make sure you review your assessment here. So you can see in this is round two now because I advanced around in the practice game. You could see how increasing my profit margins has greatly increased my earnings per share, as well as buying back some of my stock. So I was able to, if I go to the finance page, we'll see that my outstanding shares are now 42 where they were 51. So that helps. If you buy back stock, you could see here, watch the earnings per share here as I buy back. I'm going to buy back 12 million shares of stock. Earnings per share pops up because, well, it didn't actually pop up that much, but that's the stock price. Earnings per share is down here. Did that change? Yes, that popped up a little bit. As the stock price goes higher, it gets harder and harder to do that. Okay, so that is the video today. I hope you found this helpful. Not all these review videos will be this long. I'm just trying to give you as much information and help you as much as I can so you are successful in the simulation. You deploy a successful strategy, and successful strategies in business are strategies that increase your earnings per share, increase your profit margins, increase your revenue growth. These are things that you want to do and you want to deploy when you're creating your vehicles. Okay, I hope you enjoyed this video and it was helpful to you, and I will talk to you soon. Okay, so take care.